Welcome back from a long weekend break, and today will be the Tuesday, the 2nd of June 2026. And welcome back to a brand new week and as well as a brand new month. Very interesting movement on the global markets yesterday, where we initially starts to see a bit of a risk off behavior, a minor one, due to skirmishes between US and Iran, rhetoric, uh, where Iran came up with a remark stating that US-Iran peace deal has ceased because of Israel attacking Iran's ally, Lebanon. But however, Trump has decided to deuce out this tension by saying that US/Iran negotiation goes well as planned. That created a last-minute risk-on appetite seen in the US stock market, where all the three major US stock indices rose to fresh all-time high yesterday. A bit of profit taking in the Asia session today, but majority of the key major Asia Pacific stock indices continues to help respectively above their key short-term support level. Interestingly, gold continues to remain lackluster due to firmer US Treasury yields overnight, where gold shed by close to about 1.2% after its bearish reaction of its 20-day moving average. Welcome back, and I'm Kelvin here. Before we kickstart today's daily dose, which is on a Tuesday, the 2nd of June, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and pardon me, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So just to make sure that everything is good on the screen. All right, it should be fine. So let us now have a quick recap what has taken shape yesterday and as well as in today's early Asia session. Then thereafter, I will cover the full suite of the intraday technical outlook. Bear in mind that we are now at the start of the brand new week, given that yesterday was a public holiday in Singapore. So yesterday news flow is more pertaining to the situation between US and Iran as usual. So what we could see over here is that there's a bit of what I call skirmishes between US and Iran due to the fact that there's this particular, that this ceasefire agreement slash ongoing peace talk, the progress all dependent on the situation with Israel and Lebanon as well. So we know that Lebanon is a key ally of Iran over here. So yesterday there was this news flow saying that Iran stated that it was suspending talks with the US amid ongoing clashes in Lebanon, where Israel has continues to strike Lebanon due to a dispute on the border over here. So, however, Trump tried to defuse the situation as usual, saying that things are going well as expected, and peace talks between US and Iran are alive, all right, as Trump tries to aim to calm Lebanon tension. But however, despite this particular news flow, we see a bit of conflicting intermarket and we call it a cross-asset intraday movement. The US dollar didn't actually slide, but however, the US dollar continues to be trapped within a tight sideways range. All right, let me hopefully the things are out. Yeah, good. All right, so let me share with you guys. So overall, what we could see over here is that despite that very strong risk, not strong, the mid-session risk on behavior in the US stock market, the US dollar did the US dollar didn't fall, but instead it continues to trap within this tight sideways range since 15th of May, holding below 99.51, which is the minor range resistance, and minor range support level is 98.92. That now confluence with the movement of confluence with the area of the 50-day and the 20-day moving average. So the dollar continues to be trapped within this tight kind of a four weeks plus of range bound configuration. On the upside 99.51, on the downside 98.92 over here. So one of the reasons why the dollar continues to remain trapped is also due to a potential hawkish FOMC rhetoric that may start to be much more obvious after the release of the latest dot plot in this month meeting over here. So the reason why we continue to see a very strong this U.S. Federal Reserve hawkish rhetoric is being priced in by the Fed Funds futures traders over here. So let me share with you the latest CME Fed Watch 2 uh, take on what is the pricing by the Fed Funds futures traders on future interest rate trajectory coming out from the Fed. All right, over here. So let's look at the aggregator tab as usual. So current Fed funds rate is 3.5% to 3.75%. So earlier on at the start of this year, markets are still expecting at least one interest rate cut by the Fed before 2026 ends. But however, this interest rate cut has been totally evaporated as the US-Iran we call it conflict slash war is showing no clear signs of a what peace deal resolution, despite both key stakeholders are looking to find one in the middle ground. So by the end of this year, which is the last meeting of this year, December the 9th, 2026, market participants in the Fed Funds futures market as compiled by the Fed CME Fed Watch 2, indicating that 65% chance, more than 50% chance that the Fed may hike rates instead of cut rates to bring the Fed funds rate up higher to 3.75% to 4%. And that probability increases by 98% on the first quarter of next year, which is the March 17, 2027 FOMC meeting. So Fed funds future traders are now looking for a much more hawkish Fed and totally price out a interest rate cut by the end of this year. So that could actually solidify when we start to find out more from the Fed after they release their latest dot plot in this month meeting, and as well as under the leadership of a new Fed chair, Kelvin over here. So that actually explains to us why the dollar can't really move much yesterday. And also due to another reason why the Fed funds futures traders are pricing a much more hawkish Fed is due to a firmer oil price. So we know that oil price eventually at the end of the day will start to fit into the so-called the will fit into the CPI basket, all right, eventually, all right, because we know that oil prices are being used as one of the core input in terms of running businesses and as well as a byproduct of other consumer basket items as well. So yesterday, advisors from OPEC Plus over here, so oil industry expert told OPEC Plus that the current supply disruption caused by the closure of the Strait of Hormuz will persist till the end of the year, even the waterway reopens promptly. That means even though if tomorrow suddenly US and Iran decided to have a official or slash interim peace deal and Iran has decided to totally reopen the Strait of Hormuz, that will not actually create we call it a clear reduction in oil price because of installation are being damaged. It takes times for oil supplies to go up back to the normal level pre-war, and because of this, we may start to see firmer oil prices. Okay, so that causes a fit-on impact on the US dollar, and as well as the pricing by the Fed funds futures traders over here, looking out for a potential interest rate hike by the end of this year. So the reason why the US stock market is able to rally yesterday was due to optimism in AI related plays. So you see the SPX, the Nasdaq, and the Dow Jones all rose to fresh all-time high, intraday high, led by the Nasdaq 100, up by 0.6% over here. So give me a minute, 1 second. Let me do some administration because it seems to me there's some error going on over here. 1 second. All right, so just give me a couple of minutes to do some administration stuff. It seems to me that the system is a bit of hanging or whatever. Let me just do some confirmation, all right? Just bear with me for a couple of minutes. My apologies before I resume. Okay, give me a minute again. Sorry about that. Uh, Sorry about that. Let me. All right, I think hopefully everything is good now. All right, so just to make sure that everything is good again. Oh gosh, what's going on? All right, so yeah, I think everything is fine. Okay, just now there's some technical issue. Okay, so one of the reason why the SPX and the Nasdaq 100 and the Dow Jones managed to gain positively yesterday, despite the fact that we see a firmer oil price, and where the U.S. Federal Reserve are now turning more hawkish, as being priced in by the Fed Funds futures traders, was due to AI optimism news flow yesterday. So yesterday we have this particular optimism news flow coming out from Nvidia. So Nvidia yesterday rose by a whopping close to 6% due to the fact that they are now taking on Intel and AMD with AI chips for PC, personal computers. That means going forward, they may start to go into the consumer market on top of their current crown jewel, which is the enterprise market. So what we could see over here is that the heat map of the S&P 500, we see a deep, what I call it, sea of green in the technology sector, NVIDIA. And for sure, competitors of NVIDIA like AMD underperform, which negative 1.16%, together with Intel as well, down by a whopping negative 4.67%. Despite these two, AMD and Intel, they tend to have a moat in the consumer PC market. And right now, yesterday's NVIDIA announcement saying that they are building AI specific chips for PC over here. So, and if you look at the entire sectorial performance, we see a very narrow sector performance yesterday, where there are only two gainers, which is the technology up by 3% and energy up by 1.8% due to the skirmish between Iran, Israel, and Lebanon that causes Iran to state a rather statement saying that peace deal talks with US are off, and we start to see the nine other sectors are in the red yesterday. So a rather very narrow breadth on the sectorial performance in the US stock market yesterday. And also that pretty much sum up the first segment of the daily dose. So let me now move on to the second segment, which is the intra outlook segment. All right, so before that, let me do an expansion of the screen first by hiding myself. So hopefully the screen doesn't go froze again. Yeah. Okay, good. So let's start with the FX market. Oh, well, give me a minute. All right, 1 second. Okay, so let's start with the FX market first. All right, so hopefully things are good on the screen. All right, so what you see is the US dollar index. So now let's move on to the euro dollar. So the euro dollar, before that long day break on yesterday, Visa Day, we previously have a short-term pivotal support level as highlighted at the 1 1615, 11606. Price action yesterday tumbled and managed to bounce off exactly. It tumbled at the start of the US session and managed to bounce off as the US session progresses, right exactly at our pivotal support zone. So indeed, this is a pivotal support zone to watch to maintain a minor bullish bias for today on the euro dollar for it to move back up towards a bunch of intermediate resistance, which is confluencing at 11660, which is the 50-day moving average, and coming close to the 20-day moving average as well. So 11615 slash 11606 short-term pivotal support for today to maintain a minor bullish bias scenario. First resistance level to watch, pardon me, will be at 11644, something like an upside trigger level. Above it, potentially seek up higher towards 11660. A break above 11660 may see a prop at 11685, which is a key intermediate resistance level because that confluence with the key 200-day moving average as well at 11685. However, a price action breakdown below 11615, 11606, that could primarily invalidate today's minor bullish bias and see a further slide to test a key medium-term support level at 11585 that is confluencing with the swing low of 20th of May, 21st of May, and as well as 28th of May, and also confluencing with the lower limit of this ascending channel that has been in play since ascending trend line, pardon me, that has been in place since 13th of March this year, right? So that's for the euro dollar. So very quickly, let us take a peep at the sterling dollar over here. So the sterling dollar also managed to bounce off our short-term pivotal support level at the 134.20 level on yesterday's start of the US session. So no change, continue to have a minor bullish bias for today. First resistance level to watch will remains no doubt at 134.90. There's also confluence with the 20-day moving average as well. Only a breakup above 134.90 will potentially take us up to the minor swing high of 26th of May over here at this 135.08 level. Okay, let me put it in writing. 1.3508 level. All right. However, a bearish breakdown below 134.20 that would invalidate today's minor bullish bias and see a further slide to revisit the swing low that was seen on last Thursday on 28th of May at 133.77 slash 133.67. 33.67. Okay, so that will be the sterling pound over here. Let us now go to the Asia Pacific currency, which is starting with the Aussie dollar. Right, let me expand the screen. Okay, so Aussie dollar yesterday also managed to bounce off very closely with our pivotal support level that we highlighted earlier, and now a bit of excess at the bottom at 71.20 slash excess 71.08, which is so confluence with the rising 50-day moving average. So net overall price action can't really break up the 72 figure level, which is 72.10, and try to do a whipsaw around the 20-day moving average. So with that, this 20-day moving average will be the intermediate resistance level to watch for today at 71.80. So only a breakout above 71.80, potentially seek out 72.10 on the intraday basis. So net overall still maintaining a mild minor bullish bias scenario with 7120/7108, two resistance level to watch for today on the intraday basis for the Aussie dollar, 7180 followed by 7210. However, breaking below 7108, that would invalidate today's mild minor bullish bias on the Aussie dollar to see a further slide towards 7085, maximum 7055, which is the minor congestion area of 10th of April and 13th of April this year. So that's for the Aussie dollar. Next up will be the dollar yen over here. So the dollar yen continues to grind higher and is right now approaching a intervention risk level at 160.23/160.45. So that was actual BOJ intervention previously around 2 years ago on the 26th of April 2024. And above it will be at 160.65, which is exactly a final warning from Japan, of one of the Japan vice finance minister, stating that the dollar yen is getting too hot on the upside. So that was at 160.65. Previously, that final verbal warning came on the 30th of April this year. All right, so we are approaching this risk zone over here at this point in time. So, however, from a technical perspectives, at 159.85, which is this former minor swing high of 13th of April and 24th of April, there's a failure bullish breakout where it actually did a reintegration back below it due to the intervention by Japanese authority. And what we could see is that the RSI has now starts to shape a bearish divergence as well, and it start to exit from the overbought level. So for today, I will have a rather mild bearish bias on the dollar yen using 159.85 as my short-term pivotal resistance level. Downside trigger level will be yesterday's Asia session low over here at 159.45. All right, breaking below 159.45 may expose 159.10, maximum 158.80, which confluence with the 50-day moving average. However, a breakup above 159.85 will see a squeeze up towards this intervention risk zone area, 160.23/45, followed by 160.65 over here. So that's for the dollar yen. Do keep a close eyes watch on it as it's now trying to probe towards the previous intervention risk area or risk zone where the Japanese authorities intervene significantly in the FX market by selling the dollar, buying up the yen previously. All right, so that's sum up the four intraday technical outlook on these four major US dollar pair. So let us now take a look at the major stock indices over here. All right, let me expand the screen. So let's start with the Asia Pacific ones, with the Hong Kong 33 as our first outlook for today. That will be representing the Hang Seng Index. So the Hong Kong 33 managed to survive again after bouncing off on 28th of May, which was last Thursday, somewhere around the congestion area of 30th of March this year. All right. So if you were to look at the weekly chart, all right, the weekly chart over here. So there's this very long-term pivotal support at 24,764 over here. So this is something like a range support level that was previously formed on 1st of September 2025. All right, and from there it tries to trade in a very sideways complex range since then. Right, so this is the weekly chart of the Hong Kong 33. All right, over here. So back to the hourly chart. So hourly chart, we now start to see some form of bullish momentum, at least in the near term, coming back into the Hong Kong 33. So what we could see over here is that today's intraday rally got rejected again right below 25,850. All right. So this level also kind of confluence with the 50-day moving average and the coming downward sloping 20-day moving average, acting as a similar resistance around this 25,850 level over here. So however, what's interesting is that the RSI didn't have a bearish divergence. All right, there's no bearish divergence on the RSI, so indicating that perhaps we won't see an intraday minor pullback before another push up may materialize again to retest 25,850. So with that, I'll be using 25,360 as my short-term pivotal support level for today to maintain a mild bullish push up after a minor setback that may take shape. As long as this minor setback holds above 25,360, I will maintain this mild bullish bias push up. First resistance to watch for sure will be 25,850. So only breaking above 25,850 will gain more credence for the rebound to continue further towards the next intermediate resistance area at 26,080, 26,210. That also confluence with a Fibo retracement level as well, which is the golden ratio of 61.8% from that previous decline from 14th of May 2026 intraday high to last Thursday intraday low. However, breaking below 25,360, that would invalidate today's mild bullish push-up scenario to see a further decline towards 25,070. Breaking below 25,070 may see further weakness to expose last Thursday minus swing low and as well as the swing low area of 31st of March 2026 over here. That is coming in as the next intermediate support zone at 24,730, 24,606 over here. Next up will be the Japan 225 over here. So the Japan 225, previously we have a bullish bias. So bullish bias almost hit our resistance target at 67,790, and right now it did a minor pullback over here. So now minor pullback is now fast approaching the hourly RSI is now fast. The minor pullback has led the RSI to fast approach its oversold region and back now towards the former major ascending channel upper boundary turn pullback support level as well. So with that, we will now have a slightly adjusted upward short-term pivotal support level for today to maintain a bullish bias for the Japan 225. That's representing the Nikkei 225. 65,250 will be our short-term pivotal support level. Two resistance level to watch today on the intraday basis. First level will be 66,520 upside trigger level, followed by 67,224 level. All right, so these are the two resistance level to watch on the intraday basis. However, breaking below 65,250 may see a dip down to retest 64,700. Breaking below 64,700, which is our previous short-term pivotal support level, may trigger a deeper corrective pullback scenario to retest the rising 20-day moving average that is confluencing with the former all-time high area at 63,788, 63,270. Next up will be the Germany 30 over here. So the Germany 30 also managed to do a rather corrective pullback since hitting the 25th of May resistance area at 25,410, 25,489. All right, so that also confluenced previously with the current all-time high area as well, slightly below it on 14th of January. So with that, it managed to bounce off from a former minor swing low that was formed on the 28th of May. All right, bounce off yesterday. So it seems to us that it now formed a minor range support level at 24,920. And this 24,920 also confluenced with the previous gap up that was seen on the 25th of May. All right. So using 24,920 short-term pivotal support level, I do have a mild bullish bias on the Germany 30 today that's representing German index for it to float back up towards the top of this minor range. First step, 25,272, followed by, if this level breaks up, followed by a retest on the range top that has been in play since 25th of May at 24,410/25th 25,489. However, breaking below 24,920 may see the trigger off of a minor corrective decline sequence unfolding towards 24,700 and 24,793 for maximum 24,663. That is confluence with the rising 20-day moving average. Next will be the outlook on the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So the US Wall Street they squeeze up and hit our resistance zone, if you could recall correctly, during the previous break that we went off for a break on last Friday, where we watch out for the upper break of the neutrality level. So the upper break of the neutrality level managed to see a squeeze up, hitting the resistance before staging a pullback yesterday, and now is trading sideways in today's Asia session. So with that, right now it has started to form a minor ascending channel from the low of 20th of May 2026. And what we could see over here is that it's now bouncing off from the lower limit of this minor ascending channel that is confluencing very closely with yesterday's US session low that managed to do a retest and a minor bullish reversal after testing the former minor swing high of 27th of May and 29th of May, all confluencing at 50,765. So hence, I will have a bullish bias for today on the US Wall Street 30 using 50,765 as my short-term pivotal support level. First resistance level to watch out for will be today's Asia session gap down over here, this gap down level. All right, at 51,008. Breaking above 51,008 may retest 51,205, 51,320 over here. All right, so this is the current all-time high area. However, if we see a bearish breakdown below 50,765, today's bullish bias will be invalidated to see the extension of the minor corrective decline scenario unfolding to retest the current former all-time high that managed to survive on 28th of May at 50,541, 50,390. All right, over here. That's for the Dow Jones Industrial Average, which is the US Wall Street 30. Next up, the SPX 500. So the SPX 500 also squeezed up, almost hitting our resistance level at 7,627. Printed an intraday all-time high at 7,625 on Monday, yesterday, before dipping that pullback. So with that, we will now have a tightened short-term pivotal support level, pushing it up to confluence with the former minor swing high of 25th of May and 27th of May, and also confluencing with the lower limit of this ongoing medium-term ascending channel drawn from the low of 2nd of April this year. So that will be at 7,548. So using a tightened short-term pivotal support, 7,548, maintain a bullish bias on the SPX. First resistance level to watch will be 7,627, 7,632. Only a breakdown below 7,548 that would invalidate today's bullish bias view to see another round of minor corrective decline unfolding towards 7,496. Breaking below 7,496 may see a further extension of the decline to revisit 7,455. That is confluencing with the rising 20-day moving average. All right, so that's for the SPX. Lastly will be the Nasdaq 100. So the Nasdaq 100 also did a push up, almost hit our resistance level at 30,728, 30,795 as portrayed earlier on last Friday. So printed a intraday fresh all-time high of 30,656 yesterday. So with that, price action now is coming very close to the lower limit of this minor ascending channel that I drew from the low of 19th of May. So this will be my first intermediate support level to watch, 30,274. I will use this congestion area here as my pivotal support for today, a slightly upward adjusted one, 30,074. So as long as 30,074 short-term pivotal support holds, maintain a bullish bias on the Nasdaq 100. First resistance level, 30,728, 30,795. However, if price action breaks down below 30,074, that will invalidate the bullish bias and kickstart another round of minor corrective decline, exposing the next intermediate support, 29,700, maximum 29,433. That is confluencing with the rising 20-day moving average. All right, so that sum up all the intraday technical outlook on these major stock indices. Let us now proceed to the commodities market, starting with the Gold XAU/USD. So Gold XAU/USD, no change, continues to trade within this sideways range. Still recall that on the upside, I'm not so bullish despite the strong push up from the 20-day, 200-day moving average after intraday break below it, because it still has an intermediate resistance at the 20-day moving average where it got rejected exactly yesterday, but managed to bounce off in today's Asia session right exactly at our lower limit of the neutrality zone that we highlighted on Friday, which is 4,456. So hence, we will still maintain our neutrality bias on Gold XAU/USD, maintain neutral between 4,580 and 4,546 for today. Lastly will be the West Texas crude oil over here. So let me expand the screen. All right, so for West Texas crude oil, yesterday we did see a strong bounce over here. So this strong bounce was catalyzed by that conflicting remarks coming out from the US-Iran situation. And what we could see in today's Asia session, there's a slight pullback. And very interestingly, yesterday's push up managed to see a bullish exit from a former minor descending channel. All right, over here. So with that, we will now flip to a mild bullish bias for today on the West Texas oil, using yesterday's low area at 91,040 as my short-term pivotal support level. First resistance level to watch is going to be 97.40, which was the minor swing high of 27th of May, where the bulls did a retreat yesterday as well, printed an intraday high of 97.20. So 97.40 first resistance level, breaking above it will see a probe at the psychological level of $100 per barrel, which is also confluencing with the 20-day and the 50-day moving average. However, if price action breaks down below 91.40, that would invalidate the mild bullish bias of West Texas crude oil scenario for today and see a further slide to retest yesterday's minor swing low level at 89 figure. Right, so breaking below 89 figure may expose further weakness towards the previous 20th April 2026 gap up support area at 89 figure level slash 87.60, pardon me. So it's 89 slash 87.60 next. All right, so flipping to a mild bullish bias for West Texas oil using 91.40 as my short-term pivotal support level for today. First resistance level to watch will be 97.40. All right, so with that, that sum up all the intraday technical outlook. So let us now proceed with the third segment of daily dose, which is what are the key events slash economic data to keep a lookout for today. So today, during the European session kickstart, we will have Eurozone aggregate inflation preliminary figure up for the month of May at 5 p.m. Singapore time. So the focus will be on the core inflation rate year-on-year preliminary for May. So market is expecting an increase to 2.4% year-on-year from 2.2% previously in April. So if it surpass more than what market is expecting at 2.5 or 2.6%, that could further support a bounce of the euro dollar from the highlighted pivotal support which I shared with you guys earlier on. So that will be at 5 p.m. Singapore time. And as we head into the opening of the US session, we have one Federal Reserve official speaking, Fed Hamak, at 8:30 p.m. Singapore time. And another tier 2 US job market data to take note of will be the JOLTS, jobs opening data for April. That will be at 10 p.m. Singapore time. So market is only expecting almost a similar figure of jobs added, 6.83 million from 6.866 million printed previously in the month of March. All right, so that sum up today's daily dose of market insights, and the key highlights to take note of will be the ever fluid US/Iran situation that could create a wild swing on the intraday basis across the global market space. So with that, risk management still remains paramount, especially on the intraday basis. So I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.